Next stock, LMFA. I seriously just cannot take this stock seriously because I read it as laughing my ass off. Happy Monday, everyone. Ending the morning session with a small green. My main watch on the day was NIO, NIO. So the stock, if you look at the charts, we're trading at all-time highs, and they have some pretty good news over the weekend with NIO Day, announcing new products and new partnerships, and a lot of analyst upgrades today. So overall, I'm long biased on NIO. So I had some, pretty decent entries on the dip buy, and then unfortunately I didn't sell into the breakout, because a lot of times on a stock like NIO, a lot of times we see continuation on the daily. I really thought we were gonna hit $70. But unfortunately, we didn't. It was kind of tough, seeing that I was up a lot. I was up from 63, even at the 63.80s, and then, yeah, I was up like $3 a share, $4 almost, and didn't sell into it because I was trying to hold and be patient for the big move. Being that it's early on, first 10 minutes of the trading day, I was trying to be patient and let the trade work out. But unfortunately, we sold all the way back down. And I stopped out of some position, and once we bottomed around the 62.50s, I re-added back in, added on the way up here. I'm not afraid to add higher, right? Because I have that big picture thesis on the NIO long. But unfortunately, I just couldn't break out and hold the 65s and retest higher. I did go back in smaller size after these sales for some smaller scalps, but right now we're reclaiming 64 VWAP. I'm out of NIO for now. A little bit disappointed, but also if you also have to think about it, if a stock sold off from the highs and consolidated, which it did for an extended period of time from basically around 1020s to the 1130s, 1140s area, they held the $63 this level. They held this level firmly. You can see it retested once, twice, 3, 4 times. And then each dip, they got bought back up. So I'm still bullish on NIO. I think we might see more continuation to the upside on the daily. But I don't know if that's going to be today. Could be this afternoon or tomorrow. So overall, the long turned out to be a small win, which is okay. But as day traders, we're never happy, right? Even if we're ending with a small profit. But if you have to think about it this way, all your trades should have 4 potential results: small win, big win, small loss, or break even. So those were the planned results for this trade. So ended up with a small win on this, which it's okay. Like, I'm a little bit disappointed. I'm disappointed. My main watch on the day really was just NIO, and I was really looking to capitalize on the dip buys and on the long sides once it starts trending. But when NIO is doing this choppy action, trading in a channel between $65 and $63, it's hard to trade unless you channel trade for some small scalps, which it's viable, but you just want to make sure you are using the levels and being patient with your entries. So next stock, we have LMFA. So this was just a tiny scalp trade on the side for me, and I just cannot take this stock seriously because it just sounds like laughing my ass off. But this stock was a small short for me on the side while I focused on NIO. You can see the stock, had a pretty good run up after hours, and pre-market today is sold out from 440s and all the way down to 260s. And then out of the gate, we had a push towards this 370s, had a small short, just scalp size, and then short on the way down, 320s, added some 310s, and then covered most of it around 280s, and then re-entered once we failed that $3 repeatedly. That breaks, and it starts holding around here. That's where I took out all of the short, and the stock is reclaiming, and kind of just sideways. But the daily chart still looks like it got sold off from the highs. But small trade on the side, just a scalp for me. We'll see if this consolidates for a bigger move. It seems like they're slowly trapping shorts here below VWAP, 280s and holding a higher low. So we'll see if it gives us a bigger move later on. So let's go over some Q&A, shall we? So the first question is basically asking about the time frames, what time frame I use to trade. So when I'm trading the open, especially when it's very volatile, I prefer to use a 1 minute. And I do think the time frame you use for your trading will be determined by your trading setup. If you are more of a trend joining on the large caps for the all day long, for the breakout moves, then I think those will be good with higher time frames, such as 5 minutes, or even 10 minutes. But if we're doing the momentum trades, especially when a stock that's very volatile, where you're trying to catch the dips, I prefer to use 1 minute, or sometimes at 2 minutes as well. So that's just kind of how I see it. There's no one time frame that fits all your strategy or all your personality or all your trading style. It really depends on how you trade. Generally speaking, if you're trading the faster setups, like the momentum trades like we just talked about, the parabolic moves upside and downside, the lower time frame is preferred, and I just think the price action moves are clearer on the lower time frames as well. But as for swing trading, you want to use the larger time frames, such as the hourly chart, 4-hour chart, or the daily chart for your swing trades. So again, it depends on your trading strategies or your setups. If you are newer to trading, if you're a beginner, you can start with a 5-minute time frame or the 3 minutes as well. So the second question is a good question. How much is your equity in your trading account, and what do you suggest? Should we pile up the profits in the trading account, or should we keep our equity fixed and withdraw our profits and have backup in case the account will blow up? So I think this is a really good question. It's one that I get asked a lot by my members. I always suggest that if you can, treat your trading like a business. So just like a business, you pay out salary to your employees every 2 weeks. So I would do the same with your trading account if you can. And obviously, while you're on the road to building your account to be PDT, that will be a little bit more difficult because you want to go through that $25,000 mark. But I think once you're over that, it'll be a good idea to take out, to pay yourself, even a couple $1,000s or whatever you need every 2 weeks. I think that's a good idea. But I will say, during times of volatility where there's a lot of plays, I tend to keep more equity in my accounts. So it depends on the market condition. If things are slow, then I'll definitely keep it fixed at a certain amount. But if there's a lot of opportunities, then I will maybe just withdraw a very, very small amount just so I can say I have done it, I have paid myself out. But generally speaking, I think it's a good idea to treat it like a business and pay yourself every 2 weeks. Because, unless that money is in your actual bank account, you don't really see it, right? Otherwise, it's just in your trading account. And like this person said, a lot of times when we're careless, that could lead to a big blow up. And you lose like 2 weeks or even a month of your profit. And then that's the time where you'll start questioning, oh man, I wish I paid myself out every 2 weeks just to lock some profits in your actual bank account. Now, the third question is from Nick. He's asking about, trying to average into a bad position and keep changing my strategy. How do I know when to drop a trade? Do you have a video in more detail? So a big no-no in my playbook in terms of day trading is never average down to a loser. If you guys have been following me for a while and watching my recaps, this is just how I trade. I would much rather just drop a trade when it hits my stop loss than to keep on holding and hoping and averaging down and hoping for it to reverse, for the stock to go back to green. I kind of look at it this way, that stocks, they tend to trend, whether it's to the upside or the downside, for at least an extended period of time. So why add into a loser and put more of your hard-earned money in the losing position when it's already trending down, then I just rather get out of that initial position for a small loss. Then I can use that capital to go back into a different trade that's already trending to the upside. So I much rather add on the way up than to keep on averaging down to a loser, if that makes sense. So the short answer is just have a stop in mind and follow that before you enter into the trade, because unless you start doing that, your winners are gonna be smaller because each green you see you're gonna get out, and then your losers will be bigger because you keep on averaging down. So hopefully that makes sense to you guys. If you have more questions on this, you can leave them in the comment section. But in my trading rule book, averaging down to a loser is a big no. Because that's the biggest reason most people blow up. They'll keep on averaging down, putting more money in the losing position to a point where on the winning position in the trades that's actually working, you don't have any more capital to add into it. If you have any more questions for me, feel free to leave them in the comment section below. Thank you guys for watching, and I'll see you guys next time. Hey guys, thanks for watching. I hope you enjoyed the video and the bad jokes. If you want to see more day trading content, make sure to subscribe and follow me on Twitter and Instagram for more. If you'd like to trade with me daily and get my free weekend watch list and trading journal, make sure to check out the links below for more resources. Stay green, stay positive, and I'll see you guys next time.